You are listening to chartingwealth.com for Tuesday, September the 18th, 2018. Our book in its sixth printing is for sale, Charting Your Way to Wealth. You want to know what we do here at the channel? It's the way to learn. We've got it all there for you. You can find the links in the show notes, and we appreciate your support. Let's jump into these charts. We see the S&P 500 and the NASDAQ 100 down. The NASDAQ 100 down big for the day. We see bonds just about breaking even, 0.01% up, if you can call that up. And we see that gold is up 0.51%. Let's first jump into the S&P 500 on the weekly chart, starting out with a green up candle. And again, that's the first day of a 5-day candle. Derivative oscillator, however, is heading down, and the price percent oscillator is heading down. So again, things seem to be weakening. Remember, the market peaked back on the week ending Friday the 31st of August, as we're in September going into the third week. So pay attention, and let's just see if we're going to have a down market in October, mentioning that month. Remember, that's the month where all market crashes occur. We go to the 2-day chart. What do we see going on? Well, on Thursday, the prior up candle ended, and then this latest candle ending on Monday shows us that, again, we've got another up candle. However, derivative oscillator continuing to gain downward momentum, actually just flipped over into the red, and the price percent oscillator is heading down. So what are we seeing? Well, these are Heiken Ashi candlesticks that, again, are showing average pace of price movement, but our indicators are showing us that indeed price acceleration oscillation is tending down. It gives us sort of a forerunner of what we might see coming up in price. Remember, price is still well above the weekly on that 2-day chart, so just keep your eyes open. Remember, down for the day. What do we see going on? Well, we're getting close to a crossover going down on the 4-hour chart. So let's just continue to watch. Maybe all of this up movement's finally going to come to an end. All good things must come to an end at some point. Don't know if that's happening, but we're just watching. It's all we can do. Watch and trend follow. Keep in mind, however, that price movement's still above that weekly chart, still in a confirmed up move on the weekly until it changes. What do we see going on the Qs? Little different. We had it laminated at the end of the week. Looked like it was going to be a strong crossover at one point last week, ending on Friday the 14th of September. That didn't happen. Really a sideways slide, but this week started off decidedly down 1.42%, and we see that the derivative oscillator now has flipped over, so we may have a confirmed down move at the end of this week. What do we see going on the 2-day chart? And that would be a weekly vertical crossover going down. Latest 2-day chart is a red doji. Lots of indecision, tending down. Remember, we're in a confirmed down move since the 2-day candle ending on the 7th of September. Then it sort of went sideways since then. However, our oscillators are continuing to head down, in fact, spiking down strongly on this latest 2-day candle as far as the derivative oscillator goes and the price percent oscillator. And then finally, what do we see on that 4-hour chart? Well, it crossed over at the end of the day. Now, I did tell you guys to pay attention to those of you who were just dying to jump into a trade on that weekly chart. Told you to check it out, and if you did, if you looked at what was going on that 30-minute chart around 10:30, of course, you were clean if you wanted to pull the trigger early to jump in, and of course it did go down a little further and then really hammer down at the end of the day. But again, you don't have to be greedy. You can play around and push the rules, but remember, follow the rules, you typically don't get burned. But again, tell you to experiment, try, come up with your own ways of doing things, and again, if it works, we always say do it. The trick in the market is to make money, not lose money. Okay, move on to the next chart. What do we see going on TLT? Well, of course, we had a weekly vertical crossover going down. It broke even pretty much for the day. We said you can either look, well, let's just continue to look at what's going on here. We'll get to that when we get to it. Derivative oscillator gaining downward momentum, price percent oscillator heading down on the weekly chart. We go to the 2-day chart. What do we see? Again, a big red down candle, derivative oscillator gaining momentum, price percent oscillator gaining momentum. 4-hour chart. what do we see going on there? Well, we had a down morning and then a bit of a indecision at the end of the day. Again, price movement still below that 2-day trend line. Now, if we look at the 30-minute chart, what were things doing around 10:30? They're actually going up pretty strongly. So again, not really a point for you to jump in on that weekly vertical crossover. And what happened in the afternoon after the morning candle sort of went up. So you could have entered in. The only problem that we have, oops, I'm sorry. Yeah, that's what happened on the 4-hour chart, is you can sure just hang on, wait for a pullback on that 4-hour chart. And if indeed it does pull back, you can jump in when it heads down. You can go more with our first way of doing things. That is our primary method of the weekly and the 2-day moving in the same direction, pull back on the 4-hour chart and then jumping in. This 4-hour chart's long in the tooth going down. So those of you who held back and didn't jump in, just fine. It just does appear to be bottoming out after a long, long down move on that 4-hour chart. And that's okay. We don't have to rush. We have plenty of time. First rule, don't lose money. Second rule, make money. Let's go lastly to gold, up 0.51% for the day. Gold still tracking sideways. Derivative oscillator losing downward momentum. Price percent oscillator now is starting to head up. Is gold bottoming out? Will it start going up? Well, if and when it does, and we have confirmation, we're going to jump in and ride that train up if that's where it's going. What do we see on the 2-day chart? Well, a red spinning top, which means indecision, tending down. Price movement is above on that 2-day trend line. Again, 2-day is going in the opposite direction. Got to wait for that crossover going up on gold, and maybe that'll be happening sooner rather than later. Derivative oscillator losing some momentum, but price percent oscillator heading up. 4-hour chart just crossed over in the morning, going up. So again, don't have a trade in gold because of the divergence between the weekly going down and the 2-day going up, but we are just watching for a bottom in gold. So again, keep your eye on the prize as we go through the week. Let's see how TLT shakes out, and if it gives us a potential for a trade on it, we'll just continue to watch. Again, TLT going down, and we'll just continue to watch on that 4-hour chart and just see if it does have a pullback and then gives us another move to jump in going down. And we'll watch and see if we have a weekly vertical crossover going down on Qs. That is the NASDAQ 100. God bless my friend. God bless my friends. All the best from the whole team here at Charting Wealth World Headquarters.